All right, ladies and gentlemen, the market suggests an upside move at the opening bell of 100 for the NASDAQ. We'll take that. Now, the second market guest of the new year is about to join us, and he's bringing with him some news which I find hard to take. David Stryzewski is with us, and you're saying, David, welcome to New York, by the way.
Thank you.
You're saying that this 2022 could be the start, the beginning of a new lost decade. You know that's my biggest fear, that we go through the whole decade, don't do much for stock prices, and I'll lose my shirt in retirement. Are you predicting that?
Well, Stuart, it is great to be with you here live in studio. And, 2022, we saw the stock market hit its record highs, and then now we've seen the market go down. So it's the worst time that we've actually seen for both stocks and bonds in a one-off year. And so as we look forward to the future here over the next 10 years, I think that a lost decade is very likely, given the fact that we have so much pressure coming from so many different areas all at once. And so I'm calling it the Federal Reserve bubble. Now, I believe that there is a bubble in the stock market. There's a bubble in the bond market here today. We've got a real estate bubble, and that's also hurting corporations as we look at how they are no longer able to borrow at such low interest rates. And so this whole change that the Federal Reserve has brought in has left us in a very, very difficult spot.
We can't get out of it?
Well, there's a number of things that we can do to get out of it. I'd say that we start, pumping some oil again, and that's really going to help the United States. There's a lot of challenges, though, as we look forward to the future here. And, this real estate bubble is just beginning to peak. And now, one thing to understand about real estate is that it's a lagging indicator of economic health. And so as it's starting to peak out, I've got high expectations here that what got us to this place as far as success goes is likely going to be one of the challenges that we have in the future. Growth stocks, as an example, will likely have big challenges moving forward to the future.
Microsoft is a growth stock.
Yes, sir.
I still own that thing.
Yes.
Are you telling me to sell it at 230? What is it now? It's 243. Sell at 243?
Stuart, depending upon your time horizon and everything else, I think
that's very important to me at this moment, because I'm going to be 75 this calendar year.
Yeah.
Now, I don't know how much time I've got left, but I don't want to waste an entire decade.
Right. Well, I'd say that you should be looking at the world, and I know that you like treasuries, but we look at the world as cash assets, protection assets, risk assets. That's one of your risk assets. If it's one of your favorite companies, I'm going to say that it's going to likely have a better story as the future unfolds because of how we're doing, work at home right now. But I'd say that we do need to be a lot more protected as we're looking forward here, and in 2023, 2024 especially, the tide seems to be going out.
Yeah, you're doing your best to help me out here. I can tell that, David. And welcome to New York, and a Happy New Year to you.
Thank you.
Susan